There's alarming legislation circulating Congress, and it's got support too. Progressive reform like this, strike that. Aggressive reform like this was actually promised on the campaign trail. I'm specifically referring to the new unrealized capital gains tax. And if passed, it could be the death of investing for many. For younger and upstart investors, well, investing for them will essentially be dead. And I'll break down what we know. Let's go. Hi, my name is Matt Theriault, CEO of Epic Real Estate, where we show people how to invest in real estate so they can escape the daily grind and retire early. And tragically, some of the most practical avenues available for people to retire early are under fire. You see, while all eyes right now are on COVID-19 relief, healthcare, immigration, infrastructure, climate change, and clean energy, there's a dangerous idea of the new administration that's flying under the radar. And I'm speaking of the proposal to tax unrealized capital gains. And this could change everything for investors. Here's how. Currently, taxpayers are taxed on realized capital gains, meaning when you liquidate an investment, you are taxed on that profit. An investment can fluctuate in value while you own it, but not until you sell it do you have to pay taxes on your gains. Well, that is all on the verge of changing. You see, per a new proposal championed by the chair of the Senate Finance Committee, Ron Wyden of Oregon. Then eyebrows were further raised by some senators and Wall Street investors when the new U.S. Treasury Secretary, Janet Yellen, during her confirmation hearing, expressed support for the proposal in the interest of boosting government revenues. Now that's already happened. And here's what else we know. Under this proposal, taxpayers over a certain income level or with qualifying assets exceeding a threshold would be expected to pay taxes on increases in the on-paper value of their assets, even if the capital gain was unrealized. For example, if an investment grows from $1,000 to $1,500 in a year and you don't sell it, you would still have to pay tax on that $500 profit, even though you haven't banked that profit. That presents all kinds of problems for investors. Not to mention, it would step all over the appeal and benefits of investing, if not kill the endeavor altogether for those looking to get ahead in life. Here's what I mean. This half-baked unrealized capital gains tax proposal would unfairly burden younger and upstart investors who typically start their investing careers cash poor. You see, any profits from their investing efforts could generate a significant tax bill without the corresponding cash to pay for it, thus leaving these investors with two options. One, don't make a profit, which would be pointless, or two, liquidate assets prematurely to pay the tax, both of which remove much of the incentive to investing.
But Matt, this is proposed just for wealthy investors.
Yeah, but still, even if you're in support of the uninformed tax the rich movement, this proposal's impact will be far-reaching and cross-class lines, of which would include, but wouldn't be limited to, creating a huge hurdle while crushing ambitions for taxpayers to hit a certain level of wealth. Translation? Don't get too big for your britches, young gun. Further, annually liquidating assets to pay your tax bill would serve as kryptonite to compound interest, the very cornerstone that taxpayers rely on for their retirement. You see, what is a 40-year disciplined savings plan for most would double to produce the same result, at least. Already, most people don't make enough to save enough for that plan to work. But now, they won't live long enough for it to work either.
Yeah, but Matt, I'm saving for retirement inside of a 401k.
Well, I wouldn't get too comfortable with your tax-deferred investment account. This administration has plans for that too, perhaps a subject for a future video. Another issue for this proposal would be the complexity of valuating non-liquid assets. You know, for stocks and cryptocurrencies, it would be fairly easy to calculate those gains. But what we don't know is how this unrealized capital gains tax would work for other types of assets like artwork and jewelry, collectibles, precious metals, and real estate. Annual appraisals would most definitely be required for this to work. The administrative burden of ensuring accurate valuation of a diverse array of assets and the opportunities it provides for gaming the system may, and hopefully they realize it before passing the proposal, would outweigh the tax revenue raised. That's wishful thinking, probably. And another issue for the proposal, and this is a big one, yet it also falls into the unknown category, is how capital losses would be handled. If that $1,000 investment fell to $500 in value, meaning an investor loses money, any fair tax system would give the investor the ability to offset gains, as is already the case elsewhere in the current tax code. But to create an equitable relationship between investors and the IRS under this proposal, shouldn't an unrealized capital loss result in a refund? Yes, but don't count on the government cutting a check every year for your losing investments. That ain't gonna happen. Translation here, you take all the risk every year, but we'll share in your profits every year. It doesn't seem like a practical plan, nor does it seem like a good idea to punish the administration's powerful Wall Street support by taxing their unrealized gains. But second-guessing Janet Yellen's moves to support the economy, that could be a mistake. She's acknowledged that the country's debt is rising, but said the benefits of spending more on COVID-19 relief far outweigh the risks of a higher debt burden. Well, that's an easy conclusion to make when you can turn to investors, big and small, to foot the bill. Most are predicting that any sort of aggressive tax reform like this won't be a point of business for the Biden administration until 2022. But if passed, how will this change your investing activities? Let me know below. And who do you know that needs to see this? When their name comes to mind, please share it with them. Oh, and if you're already subscribed, I pulled this video out special for you to watch next. Otherwise, I'll see you next time. Thanks for watching. Take care.